My mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What is good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again for another episode of Future Financial Strategies. I did something I haven't done in a little bit because normally I spitball these, but I actually lined out an episode, and it's going to be a value-packed episode, so I want to make sure you guys on the way in hit that like button, please. It helps with the algorithm. It helps get the message out. Couple of thank yous. I've had a lot of comments. It's really weird, and honestly, like, this isn't me being like facetious or anything. I don't like the engagement. I'm here for it. So what I do with the comments, for those of you who don't know, I check my comments every time I upload. So I'll record a video, do a thumb. When I get to uploading it, or I'll record a couple of videos and I'll have a thumbnail day the next day and record one video to try to keep the content to come in. I have a lot of things that I want to talk about. I'll have a thought, record a video, go back through. So normally at least once or twice a week, especially since I have at least twice a week, because I have 2 episodes that are update episodes. So I have my Robinhood episode, which airs on Friday. So I record that on Thursdays normally. And then I have, or super early in the morning on Friday. It depends on how it gets done, or sometimes middle of the day. But at some point Friday, you guys get an update from me, with the exception of this last week. And Tuesdays, or my Wednesday show, the crypto portfolio update, I have to record that at some point between Sunday and Tuesday. So normally at least twice a week, I'm checking my comments. Well, a few of my videos, you guys like it when I talk about Misty. Actually, it seems like you guys are tapping in on quite a few things. Like, I had some people tapping in on Operation Debt. And anyways, this week when I recorded, or last week, because this is going to be a week out because I'm ahead on my videos now. I went to check my comments, and there were a bunch of comments. Like, it was like I had like a 30-minute reply to all my comments festival, and it made me so happy. There was great conversation. I'm really liking the wolf pack communicating here in the comments with me. I do enjoy the feedback. And like I said, until I get to where I'm not even going to say if I ever get to the point to where I have an obnoxious amount of comments, just understand I'm going to always chat lives matter. Comment lives matter. Anyone who's seen me on a panel knows that it doesn't matter if I'm on my panel, if I'm on my show and it's live, or if I'm on somebody else's show and it's live. I'm engaging the chat. Like, I read the comments. So I do read the comments. And even when I had like haters, I reply to my haters and like their comments too when I first started, because apparently there was some negative feedback on my selection of investments, which is crazy considering that it's always from some nondescript person without a thumbnail or a channel that doesn't show their portfolio. Super weird to me, but like, people do that. It's the internet and everybody feels special. And like, that's good and well. But it was really an enjoyable experience going through those comments for 30 minutes and like replying back, like getting hype about this. Cause like it's on so many different random videos. Cause I was like, well, knocking stuff over on my desk there. I haven't had, obviously this isn't a big channel, so like any amount of engagement's kind of a big deal for me. But just being able to get in there, read other people on their way. There were words of encouragement, which I will probably be singling a few of those comments out on my Robinhood updates. I'm going to do those on my daily updates because I like to do them while they're fresh. But it was awesome, and I do appreciate it. I do appreciate those of you who take the time to watch the videos. Obviously, like, I'm making this to document the journey for the family members that don't want to listen to me now, for when the results start showing, and that catch up and surpass and gap in people starts happening and they're like, oh, well, like I want to know, like I'm not going to have time to talk then. So the honest reason why I'm doing these recordings and tracking my journey now is so that there's a canonical reference of everything that I'm going through, my thought processes about what's going on, how I'm looking at these investments. So that way I can just give them the channel and be like, cool, start at the beginning and go through this. Because like people want your time after you have the social proof. And the reality of the situation is once I get to that $1 million target, that doesn't necessarily mean that what I did to get to that target or to get to that Deca millionaire status will be doable at that time. But that's when people want your time. They're like, hey, you're at the mountaintop now. Like, I want your time now. And I am not the type of person who functions that way, especially if it's people I try to get in front of. Now, the people that are closest to me, I have tried to get in front of. I've told them like, yo, we're not navigating in lockstep. Like, we need to do stuff a little bit different. And me being, at least at the time, out of the elders of the family, I am the baby. Okay, it's fine. But people don't want to listen and they don't want to do things different. So when they're wanting to pull on my coattails and be like, hey, like I should have been rocking with you or should have been listening or maybe tapped in and not told you that you couldn't do any of the stuff that you said you were going to do that you're doing right now. And then after you get the results from doing what you said you were going to do, oh, now I want your time. Now sit down with me and give me your time. I'm not going to do it. I'm not like, and you know, when you guys get to this episode, I'm petty. It is what it is. Like, you didn't want to listen to me. So like now when I don't have time and I want to go do what I want to do, or I'm on to bigger and better things and I'm building at a level to where I'm going to like, I don't like talking down to people. I can talk to you from where I'm at. Like, if you're not where I'm at, I don't want nothing to do with you. You either got to be where I'm at or above. You either got to be able to teach me or we got to be able to go back and forth and have a conversation. And the Wolfpack, and the way that it's existing right now with you guys down in the comments, is we're all building together. We're all getting it together. You guys are taking the time to listen to somebody that you don't know on his journey while you're on your journey. We're doing this together. I'm not talking down to any of you. I am talking with you. I'm actually having a conversation with myself with you, which is like, that actually does sound kind of crazy, but it helps me learn and it helps me refine my thought processes and my strategies, putting it out into the ethosphere, because sometimes people will tell you like, hey, like what you just said was stupid. I'm not claiming to know everything. I'm testing stuff. And I'm like, hey, you might be right. We're going to give it a quarter, see what the numbers do and see what the math comes back. We might kick it out to a year and see how it functions. And then I'll report back whether it worked or not. But being able to get that feedback, that encouragement that, hey, I'm doing something similar. Hey, I'm thinking this way about these things. It's invaluable. And I hope that those of you who are in the Wolfpack, those of you who are tapping in, that are tapped in the comments, that are watching the videos, that are also making these steps and adjustments and on your personal path, whether you're documenting them or not, there's some gems in some of those comments. Because like, I'm not the smartest person on the internet. I don't think I'm the smartest person on this channel. I know I'm not the wealthiest person on this channel. A lot of y'all make more money than me. Definitely had some people who tapped in that definitely have some more money than me. They had a one of the Misty Whales lingered on through my channel, gave some words of encouragement. He's got 10x the shares of Misty I have, way ahead of me on my journey, and took the time to give some words of encouragement. That's awesome. Like, there's people with knowledge in the comments. So when we're going back and forth, because I do look at all the comments, I know it might take a few days, but I do look at them. I do try to reply. I'll at least reply something. And I'm going to go like each one. And like, when you get the like with the little heart, I like it. And I do the little heart. I do a double because like I'm reading it and I'm like, cool, check. That's kind of my process for going through my comments. And I'm like, hey, if I can add some context or say thank you or welcome you to the Wolfpack, I'm going to do that. Until there's just blatantly too many comments for me to realistically reply to. And I think that my comment time limit's probably going to be about like 2.5 hours or something. I don't know. But like, I put in a solid 30 last night and I got caught up on them and I felt good. And it was a great experience. I ended up, getting done with that, moving on to the next phase in my evening, because I come home, record these after a 10-hour day at work, and I'm sitting at this desk, either working on my finance, doing research, lining out episodes, recording episodes, because a lot of them, I spitball these episodes. These are all recorded one shot. That's the reason I don't have any cool editing. I am not a professional YouTuber. I just record this stuff to like put my ideas out here. And again, have that reference point for family and people that were close to me that are going to want to get at my shirt tail and have me help them with stuff after the fact. Because after the fact, I'm not going to have time. Like as soon as this money builds up, I'm going to continue building things, and I'll be documenting something totally different along with the finance. It'll be like, hey, I did this. Hey, I'm building and doing this. Hey, I'm building additional streams of income and doing experiments with that. Like I'm not going to be able to sit down and help every single person who I try to get in front of while I'm actively doing this, which is right now, and just give them ad infinitum of time for them to not do something that they could have been doing a long time ago, but they didn't want to listen anyway. So that's what this is for. So I'm not that great at it, is the long and short of it. But I do appreciate those of you who are tapping in. Channel growth. We broke up 200 subs. Awesome. We're trucking along. So whatever happens with this is whatever happens with this. Like, I mean, I'm going to tell the truth regardless. Like anybody who comes to this channel, you're getting this. You're going to get what you get my way. Like I'm not going to curb the way that I talk, the way that I present this information. I'm long-winded. I go on tangents. My brain, the ADD, I do the things with it. And that rubs some people the wrong way. Like it's fine. Like, I'm not going to make like a 2-minute video unless I can get all those squirrels upstairs in lockstep to make a 2-minute video to just say like, hey, what this is. But I wanted to make sure, because those of you who are liking the video, those of you who are checking out the content, really appreciate it. If you've been here more than twice, I'm welcoming you to the Wolf Pack. Hit that subscribe button. Hit the bell notification down below. Turn all the notifications on. I don't spam your feed. I only upload when I upload. The closest it gets to spammy is you get 5 videos out of me at the beginning of the month. That whole week you get hit with a different update, because I got a few different things, because again, we're over here tracking the results. I got a lot of monthly updates that we do at the beginning of the month. You get to see multiple of my other portfolios. I do show my brokerage account, which a lot of people in these spaces don't. I tell the truth. We navigated through a negative 30% market. We documented it. The crypto portfolio the active portfolio has just been nuked the entire year so far. Like that's just what it is. We've been documenting it. We go into debt. We talk about all sorts of stuff, but these episodes are kind of my spitballs. They're my favorite, but I wanted to talk about a strategy that I was looking at. 'Cause like I do a lot of talking about dollar cost averaging, but I wanted to do a snapshot of what that looks like when the market goes down, because a lot of I've been in Misty. I was buying Misty at $40. It was dollar cost average in it. And I said, no, I'm going to buy it pretty much indefinitely until I hit my targets. Well, my initial target was to get to 1,000 shares. Took a 30% baseball bat to the face on that. And in the process, I'm still having a dollar cost average. So now, not only do I not have 1,000 shares, Misty's price tanked. One of the godsends of that position, though, was it was still paying. And I've said this multiple times about my belief on income. I don't care as long as it pays. And so this is where my dollar cost averaging strategy comes in. And for those of you who saw the Robinhood Weekly a couple of weeks ago, I did one for one of our Wolfpack members that asked about it in the chat, and I did a breakdown on dollar cost averaging and some of the strategies that we do, that I'm doing specifically within my Robinhood portfolio. But averaging when it's down, because a lot of people will buy stuff and then it goes down and then they don't feel good. They don't feel good when the market's red. And I feel great. Like that, I get active then. But watching it in your traditional finance portfolio, my initial thought was, well, how bad is the income going to be? And Misty did not disappoint me. It stayed above $1. The lowest one I think was like 134. So at that point, I go, okay, I'm building these positions for these high yield dividends based on the worst, what I believe to be the worst case scenario. So I'm like, well, my initial target was 1,000 shares, but as I'm dragging my cost average down, I'm like, I'm going to keep buying because I want to have as many Misty shares as I can get before I get back above my cost average. So as long as we're below my cost basis, which is around, it's like $27.60. Now, when we initially took that 30% hit, I was at $32. So we've chunked it down a lot. But I wanted to document at the dippiest dip of it. I wanted to document what I was doing and my thought process. So I lined out an episode, strategic averaging in 4 steps. So from this point, because dollar cost averaging is just buying in the same frequency I'd say bi-weekly. I get my check bi-weekly. A lot of you get your checks bi-weekly. Some of you get your checks weekly. Some of you might get monthly checks. But dollar cost averaging, it's like you have an allotment, whatever your budget is for that, for your investments, and you go, hey, every 2 weeks, I'm buying $400 worth of Misty. Every 2 weeks, you buy $400 worth of Misty. Just no matter what the price is, you're buying every 2 weeks. And for me, it's based on a share number. So I do my averages. I'm going, okay, well, Misty's average is $2. Its average is $2. We've seen it as low as 134. We've seen it as high as $4 and some change. That's right. I've collected some of those $4 dividend payments. What we do with that is I go, okay, so if the average is $2, I want at least 1,000 shares so that on average, I'm getting $2,000 a month from that position. And then I can build some stuff around it to where I'm getting a couple of checks a month. That's the simplest way that I can put quickly on me and dollar cost averaging. Now, when it goes down, what I do is I start getting a little bit more aggressive. I'm like, hey, we dropped 10%. I'm going to buy some extra with this. So instead of the 400, I might buy 600. Depending on if you got it, I'd say, hey, I'm going to buy 800 because I'm going to bring my average down because it's lower than what I paid for it. So like now it's on sale. A 30%, it was on fire sale. So I started clipping positions down into Misty. I trimmed my portfolio down, converted some stuff over because it was bad all over the place. So we did some tax loss harvesting, put it in Misty. So I'll ride that. That's my A1 day one. It's a long-term hold for me. I'm looking at being in the position for 5 years. So I'm like, hey, buy it. And this is the strategy that I use. So I'm going to pull these up. I actually did some visual aids. So we're going to jump into the strategy. Step one. You want to have a realistic target average price. So at $32, realistically, buying down the average price, I'm looking at, hey, maybe I can get realistically stretch goal. I can get down to $23, somewhere in that range. Now we're coming down from 32. But the important thing is having a real, because like I know I'm not going to get down to $17. Like we saw it dip into the 17s. I knew I was like, I'm not going to be able to do that because I can't just duplicate indefinitely. Like I can't buy 3 times what I have now. Like I don't have money like that. Again, blue collar worker, half blue collar, half IT. I don't make enough money to where I can just be like, oh yeah, I can just go get another $28,000-$30,000. Like, yeah, better yet, let's duplicate it because you got to buy like 3 times that to like drag it down even more. So like you need like $60,000. I don't have $60,000 just laying around. I'm not one of the guys on Reddit who just has $100,000 to just throw at some Misty. Like that must be nice, but I'm going to get there. Not jealous. I'm just pointing out. I was like, there's a bunch of people in those subreddits that apparently have hundreds of thousands of dollars just laying around. And I was like, yo, I'm in the right room. Because if I'm the broke person, that's good. I can always work my way up. So we got to set a realistic price target. Now, with us on the upswing, it gets a little bit dicier, because now I'm like, well, if I can get down to 26, that's actually realistic at this point on this upswing, depending on how high we go. Because if we get back up to $100,000, we're back in the 30 range, and I'm going to be in profit now. It's going to go right by me. So then I'm going to have to switch my strategy to a different position, because I've already hit my $1,000 marker, and I'll have a little bit of float on top of it. So if I want to trim that down to 30 to 1,000 to start a position, I also have that option. But that's what we're going to, that's the first thing you got to do, is you have to have a realistic price target. You're not going to get down to the pinnacle of the dip unless you have the ability to buy 3 times what you bought to get you close. And, you know, I've already done a bunch of work to put a bunch of money into this position. But one of the things that I did do was I deployed margin when we were in that dip. Now, did I get the best buys? Absolutely not. Like, the lowest I got was 18. And the day that I bought at like 18, it dropped to 17 and then started coming back up. But, you know, $18 buys, $19 buys, even buying now, like I'm buying now at like $22, because my average is $27.60. So every buy that I make is dragging that average down, and I'm here for it. Like, I'm gonna do what I can do. So number 2 is the tiered averaging down strategy. Now, what that is it's got 3 phases. Phase 1 is buying 25 to 30% of your intended averaging down funds near support, which at the time that I was doing these metrics. Now, an easy way to do this is actually use AI. Everyone, take the upgrade. Just take the upgrade. It's a firmware upgrade, and it makes those of us like me, who are dummies, so much smarter, because we ask more questions. And AI can do some of this stuff for you. And it also does it faster, like in 10 seconds. So, like, use AI. The support at the time that I was working with this was 1960 to 1975. That was where support was. Now, this with Misty, since it's high volatility and MicroStrategy is super highly volatile, it's the best volatility that we could get, and that's the reason we get paid the way that we do, people. That's why we get paid. But Misty does have big swings. Like, we that 30% dip, we ate all of that. This uptick, we're eating all of that. Like, normally it eats up its supposed NAV erosion. By the time we get paid, the NAV erosion's gone. By the time you get the dividend, we done ate that up, and you didn't even get a discount if you drip, and you just buying Misty. So the reason I say, just buy it. Might as well just buy it, because the chance that you're going to catch that dip, you better buy it on Thursday before the dividends hit. That's all I'm saying. Like, if you want the discount, when they take that money out on Thursday, after they announce Wednesday, before we get paid Friday, that's when you need to buy. Because if you try to buy or you're dripping, then you're not getting the discount. Because by the time Friday rolls around, in most cases, almost, I'm pretty sure every payment that I've gotten since I've been in this position, Friday, it's eaten that up. Unless, with the exception of, as we were crashing, when the market was crashing, it wasn't necessarily that we weren't eating up the payment. The price was just going down. Like that was the only time that I've seen anything that could even closely resemble NAV erosion, and we've already fixed all that. So it is what it is. Phase 2 is the allocation for the dip opportunity, which at that point, at the point of me doing this, was $19 to $18.50. If it pulls back further, you allocate an additional 30 to 35% lower cost basis while preserving, you're lowering your cost basis while preserving the position. Phase 3, which actually, back to on phase 2, we were blowing through these dips. It was crazy. And this is where phase 3 came in, which is the panic zone. Now, this is where people like, and honestly, on the subreddits, people were talking about it's over. Like, is this going to be able to be sustainable? I'm concerned. I'm worried. The panic zone, when people start contemplating whether they're going to cut their losses, whether they're going to tax loss harvest that position and do something else with the money, it's like, hey, when are we getting out here? Like, what are we, how far down are we riding this ride? Which was $18 all the way down to $17. And we saw 17 and some change. We were smack in the panic zone. You keep a reserve of 30 to 40% in case of further downside. Use only if fundamentals haven't changed. And that was one of the things for me. I'm like, I looked at Bitcoin. Bitcoin was crashing. I looked at MSTR. MSTR was crashing. And you know what I was doing? Deploying margin, buying Misty, buying MSTX. Oh yeah, that was a wonderful play. That worked out real well for me. We did some sell-offs to pay off some of this debt. I got my 10 shares of MicroStrategy back and had an additional $1,100. I also added a share of Stark, STRK. We're going to start adding some of that into my long-term holdings portfolio because, and the reason I like Stark over Strife, which I'm going to be doing a video for you guys for a Strife strategy because I have a use case for it now. But that's what I was buying. And the fundamentals hadn't changed because the entire market's crashing. Everything that's tied to Misty is crashing. And I don't think MicroStrategy is going out of business. I knew Bitcoin wasn't going to zero. So the fundamentals didn't change. It's just the whole market's down. Everyone's on Reddit, in the Reddit sub, losing their minds. I don't know what to do. I'm down so much money. I'm getting margin called. Also, don't do 100%. Are y'all crazy? Don't 100% margin something that's highly volatile. You get 30% margin it. You could 20% margin it. Heck, you could 10% margin it. Don't 100% margin call Misty. That is insane. I mean, I deployed margin when we were down in the phase 2 and phase 3 of the lower support levels. And I didn't even hit 50% of what I was available. And, you know, I wish I would have bought more, but it would have been, I was happy I didn't have to worry about margin calls. I went to sleep every night totally fine. I'm like, this thing's going to have to, I'm going to have to wake up and this is going to have to be like a $5 share before I have anything to worry about. So that's what we do with the tiered averaging now. Now, next is number 3, position size control. This is an important one. This is the reason I say you got to have a plan. 90% of the time when I'm in a subreddit and they're talking about any of these types of products, what's your intent? Do you understand what this tool is used for? Why are you here? Are you just chasing dividend yield? Are you just yield chasing? Because you're probably going to lose a bunch of money. You're probably going to end up in a position you don't want to be in and not understand why numbers are going against you or things are going down. And they ask in the Reddit, just blatantly, like, why is Misty going down today? And like, I'm like, Bitcoin's down and MicroStrategy's down. Like, what did you expect? Like, what did you think was going to happen? Like, little bit of research goes a long way. Like, everybody hears about how great Misty is. And it is, if you're using it right. What's not great is just buying something because you saw one of my shorts about my Misty payment and my 1,000+ shares, and then you go get it, and then the price goes down, and I'm buying, and you're upset and selling at a loss. And then when the payment comes, then you come buy it back in at a worse price than what you had. That's crazy. Do research. Understand how these things work. Understand what this tool is. It's so important. It's devastating to see some of the questions that are just insanely basic. I don't understand, and I'm just doing stuff out here with my money. And I look at it from my perspective because I'm like, this is my money. This is all I've got. Like, I don't have a family that's going to just that pays for my stuff. I don't have support. I've been on my own financially since I was 16 years old. Everything I've built myself, by myself. I bought my house by myself. Loan officer was surprised and confused at the same time. Like, you're buying this place yourself? Yep. You don't have a wife or nothing? Like, there ain't no, like, you don't have like somebody nope. Run the numbers. Give me my house. Give me my money. By myself. So if I screw up my portfolio, like, that's actually my wealth. Like, if Bitcoin did go to zero, like, that's all my wealth. Like, it's like Bitcoin, my house, and now this portfolio that I'm building that's a small portion of my portfolio. So, like, when I lose money, I'm losing money. Like, when numbers are down, numbers are down. Like, my net worth fluctuates violently sometimes. But I'm making a play because and it's the same reason people will be like, oh, you should diversify. I'm like, I don't need to diversify. I'm trying to get rich. I don't have any wealth to protect right now. Like, that is an afterthought. We will get rich and then we'll worry about getting some S&P 500. And honestly, by that time, it won't even be S&P 500. We'll just be buying whatever Bitcoin's left. That's the reality of what's going to happen, because that's my barrier of measurement. If it can't outperform Bitcoin, there's no reason for me to buy it unless it's producing enough income for me to buy some Bitcoin and pay this debt off. Only two reasons. So back to position control. This is where dollar cost averaging comes in again. The first thing to understand with position control is do not try to catch up too fast. Stick to a fixed investment plan rather than emotional averaging. Now, see, the market take a little bit of something from somebody, they get mad. They're like, I got to go get that back right now. I got to dump the whole margin account right now. When we dropped to 19, now I'm at 100% margin. And then it went down into the 17s. And now you're getting margin called. Those are emotional decisions. That's not a plan. I had a set allocation that I was chunking in every week. And basically the way that it worked is I was throwing about $500 to $1,000 a week into buying Misty based on where the price action was. Which meant that, like, every week when it went down a little bit more, I was there for it. I had some dry powder via my margin to continue to invest as it went down, because I was like, hey, I know it's not going anywhere. I'm not getting out of the position. I don't have any readily available cash, but I got this margin account, so I got about access to about $20,000. We can do something with about 5 of that. And that's what we did. And then as we got our payments back, as my checks came in, I have a certain allocation that goes directly into that account. Now I'm chipping in at the margin too. So, like, there's even less of a chance that I'm going to get called because I'm not immediately redeploying it. I'm waiting a week. And so you have to have that averaging plan. The other thing that you want to do is you want to use a calculator to model your new average. So, like, as you're getting ready to do these plays, this is an easy one. So it's 100 shares at, say, $28. You add 50 shares at $19.50. Your new average is now $25.17. Now it drops down to 80. You add another 50 shares. Your new average is $23.57. Now, this is one of the things that I've updated for myself is I try to buy in blocks. Unless I'm doing the wheel strategy and I'm allowed to do fractional shares, I just block buy. So I go, for me, that could be anywhere from 10 to 100 shares is block for me. Now, if it's expensive, then it's probably 10 shares, right? So, and expensive is like if it's going to be over $500. So, for instance, I'm looking at getting into an IMST position. The block will be 10 shares for that. I'll buy in blocks of 10 because it's going to be probably about $500-$600. And so, like, I will wait until I have $500-$600, and then that's when the block starts. We go, oh, okay, cool. We're gonna go get that block. This allows you to average down logically. So that way, if you've been buying in shares at 10 and it goes down, or buying in shares 100 and it goes down, now you can go, okay, well, we had a dip. For me, I would continue buying in 10s. I would maybe try to ratchet up to 20s if I could, because for me, when I see red, I start getting hype, and I have the dry powder via my margin to do that. That's about 90% of what I use margin for. You'll have seen I started deploying margin in my Robinhood account, and that's only because as a gold member, the first $1,000 you get is free, 0 interest. I'll play in some 0 interest margin land, but you won't see it go over that 0 interest amount until we get to a point to where it's bedlam, and like now I'm willing to pay interest to like start filling up these positions. So that's the importance of position size control. And the last but not least, our number 4 is reevaluate periodically. Now, periodically, in my opinion, in this space, I am literally going through these numbers and looking and seeing where I'm at weekly, because these numbers fluctuate a lot. Like you might have to do a reevaluation multiple times a week, depending on, and like what you want to do is you want to check, you want to set your checkpoints every few weeks. And so for me, it's like payday, right? Is the volume on the product, on the position that you're in, still bullish? Volume is a big deal for Misty. I don't think normally volume's always bullish for me, in my opinion. Because MicroStrategy just has all the volatility. There's nowhere else I'm going to want to put money that's not in something that's MicroStrategy based in that ecosystem at this point. And I know, very not diversified, very focused, very understanding of the underlying products and the ecosystem and what moves those products. So again, we're trying to get rich. We start hedging once we've got something to protect, and we're trying to get up there. I mean, for me, I would say, in my Robinhood, I've already got kind of an anchor position in QDTE. It's aggressive, but it's a little bit more stable. It didn't go down 30% this last dip like all my crypto stuff did. So I've got an anchor point in that portfolio, but like that, now that we've got all of our starting positions of $500, that is a back burner position. Like it'll get dripped in, or not dripped. It'll get the wheel, whatever's left over, the scraps in between my paycheck buys, because paycheck I can buy full shares. My COIW and my PLTW positions from Roundhill, their weeklies only allow for whole shares right now. You can't buy fractional, which kind of sucks. I don't like it. But what it does do is it forces me. So I'm like, okay, so like as I'm doing the wheel strategy, I can wheel LFGY, which is going to be a starter position. And then as we're getting those positions to 100 shares, because as we move through the wheel strategy, LFGY is my landing point. Now that everybody's at 500, my next goal is to get LFGY to 100 shares, so I can be getting like, anywhere from like $40 to $50+ a week. That'd be nice. The overarching goal is 200 shares, because I want to be able to get $100 a week from all my positions. So YBTC will be a rush to 200, because like once I get to 200 shares, if you're in the ballpark, because we get a lot of 50-cent payouts, a lot of high 40s. So once we get to that point, like I'd say, actually, you know what? Just to make it even, 250 for both of those positions, and you're getting $100 a week from both. My COIW and my PLTY, or my PLTW, my Palantir and Coinbase, I haven't gotten a payment on Palantir, but Coinbase, probably about the same, 250 shares. I'm going to assume 100 to 250 shares for PLTW. And then QDTE will be the last to get to 100, but I'll just wheel everything down into that. And yeah, we're going for the gusto. The portfolio, it's a weekly portfolio, so there's something to do in there every week. Every week it gives me some form of entertainment and joy. Redistributing on Monday, because Monday is a big one because Coinbase pays you at night. So it's like Monday and Wednesday are days that I have buys over there as it's rolling through. But yeah, you gotta reevaluate it. One of the things I look at is, has Misty's strategy or holdings changed? Another one that we look at is, are in and outflows supporting a rebound? Now, at the time that I was doing this, the in and outflows, again, use AI. It's easy. Will give you that information, and you can go in and, once you get eyes on it, you're like, hey, like, we were getting really good inflows on Misty at the time that I did this. I know I use Misty for this example, but you could do this with any position that you have. Again, if it's a high yield dividend paying position, the frequency of checking might be higher, which is why I'm like, at least every 2 weeks I'm tapping in, kind of looking at the market. But I look at the market every day. So my periodically reevaluating, I'm one of those people, I do look at the market every single day, like at least on lunch. Like, I'm like, yeah, market's good, market's bad. Like, I'm going to go in there and see how bad or good it is and see if there's any opportunities, if anything is in a position where I'm like, hey, like, I need to make a move on this. One of the things that keeps this easy is I don't keep a lot of positions in portfolios. So for instance, my Robinhood portfolio, we got 5 things in there: LFGY, YBTC, COIW, and PLTW, and QDTE. Those are the 5 positions. 3 of the 5 are crypto related. Again, I look at my crypto portfolio. So if I open up my CoinGecko to check prices for crypto, I automatically know what my other 2 portfolios are looking like before I even go over there. And that's the first thing I look at when I get up in the morning. I know that doesn't work out for a lot of people, but I've been in crypto since 2013. I'm just used to red numbers. I don't know. Like, I have completely obliterated the feeling of anything besides like, hey, I need to check the market, look for opportunities, and see what's what. When my income portfolio went down 30%, I did have a week where I didn't check it that much, but I did check when it was time to make some buys. I was like, hey, like, where are we at? Like, this is so that I could start getting some buys, because we were down bad for a little bit there. Not everybody needs to do that, and not everybody should do that. Like, I am on my portfolio, all of them's necks all the time. I'm making moves, making plays, making adjustments, getting stuff set up so that I can do what I need to do. And that's just the way that I roll with it. I don't really think about it in the sense of it being a problem for me. I know it would be a problem for some other people. Like, if you look at stuff and it makes you feel bad or feel some type of way, my thought process, at least the way that I manage that, I don't invest in those things. So when we took the 30% hit, all the positions that I wasn't 100% convicted on, I clipped them. And I put them in the position that I was 100% convicted on, which left me with LFGY and Misty. And I was fine with that. I'm like, cool, 2 positions. This is what I'm feeling about this right now. I don't want anything going on with anything but these 2 things, because I understand them very in depth. And then the other positions, I was like, well, this isn't high enough, or I don't have enough shares to make the same impact of tax loss harvesting these so that it goes against my dividend payments at the end of the year, and putting them into the thing that I know that I need to get this to at least 1,000 shares, and then I can worry about something else after I'm back above my cost average. So that was the decision that I made. And there, like, you know, I was involved. I used to have a lot of the Yield Max funds, and I was in YMAX. And I looked at my YMAX position because I was trying to use that as like my stabilizer for my main income portfolio. And I looked at it and I was like, I hate this. I don't even understand why this is down this much. And it's because I didn't understand why it was down that much. It just, because I'm not in that wheelhouse. 30% off a Misty, fine about it. I'll buy more. But when I looked at YMAX, it literally made me mad. I didn't like it. It was a red number, and I couldn't process in my brain. I'm like, I understand that there's a lot of funds, and this is the fund of funds, and it's supposed to be the greatest thing ever. And I'm like, I don't know how any of the rest of these losing funds work. And this isn't paying enough dividend to like make me feel good about it. So I clipped it. Doesn't mean it's not a good fund. It means that made me feel some type of way, seeing those red numbers. And this is somebody who's lost $60,000 in the crypto market over 2 weeks instantly. Had money locked up in Celsius, lost money over there that I didn't get back for 3 years. Instantly. Waking up one day and you're just like, hey, you know that $20,000 you had, that went to zero. Hope you did something smart with the income you made off of it. But looking at YMAX go down 20% made me mad. And I couldn't deal with it because I don't understand it. It doesn't make sense to me. I don't know what the pivot is. I understand the fund. I understand what it's made out of. That my issue specifically was, I was like, well, I'm in the good funds that this company has. It's the way that I'm looking at it. I'm like, I don't understand why I'm getting exposure to these other funds that I don't think are that great, that I wouldn't buy individually, to say that I'm diversified. Like, it just makes no sense. And I'm like, I'm out on that. I'll buy Misty. I'll turn it into Misty. And that's what I did with literally everything in my portfolio. And then after we did the conversation with AI, you guys saw that episode. There's going to be an update coming for the portfolio update, but like we had to clip some portfolio positions in part of that negotiation with the AI to help me get rich faster. Sometimes the things that you do for your own benefit don't feel good, but hopefully you guys got some gems. You guys took some notes, steal this strategy. This is how I look at strategic averaging. And it doesn't necessarily have to be applied solely to when the market's down. You can just do this and make a strategy for how you're going to dollar cost average into whatever position you're going into. But I would do this rundown to figure out when a good entry point is. Like, hey, based on prices, like let's look at price trajectory and see when you should start your position and what prices you should be buying at. Because one of the things that I do is I get hype about stuff and I'll just start buying it. That's not necessarily the most efficient. Like, maybe I should be putting some dry powder on the side and waiting for a little bit of pullback, right? So hopefully you guys got something out of this. Those of you who rocked with me the whole video, as always, I appreciate you. I know the Wolfpack's got my back. I can't wait to hear what you guys think, what your thought process is down in the comments after this, because I'll be down in there for however long it takes, because there's only about a couple of hundred of us over here. So if every single one of you guys wants to drop a comment, I will answer every single one of them, because I am in there. I am down here with you, and I love hearing about your guys' progress. And, you know, we're on this journey together. We're all in this together. So anything that I get that I have a value, I'm going to start putting them into show formats, and we'll break them down like this. So that way you guys can go back, you know, clip this up so that you can go take notes or whatever. And then you guys can implement these strategies in your guys' finances and portfolios. And, let me know how it goes, because obviously, you know what they say, you're never appreciated where you're at. So the people closest to me are going to listen to me about it. So I'm going to talk to you guys about it, and we're going to win together. And then everybody can be the crazy, reckless Raidonero of their family, where it's like, hey, like, you weren't listening to me and I tried to put you on game, but now look at you and now look at me, and like, now I ain't got time. So Till next week, people. I hope you guys enjoyed. I know that I enjoyed recording this episode. Like this, like going through this again, it solidifies it for me, which is kind of selfish. I think everybody that is on YouTube is a little bit narcissistic, maybe even a little bit schizophrenic, because I am in a room talking to myself, which actually turns into you when you guys leave me a comment down below. And then I reply to the comment. I mean, I don't know. There's like a lot of mental gymnastics in there, but we're out here trying to win. And until next week, I hope you guys enjoyed it. Definitely share this video if you got some value from it. Don't forget to hit the like on your way out. It's a secondary reminder. And I'll be seeing you guys next week. And until then, it's your boy Reckless Rated Arrow. Another great episode of Future Financial Strategies. And I'm out. Peace.
Money on my mind. Yeah. Focus, got no time for games. Nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.